Hi, and welcome back again to Tim Bigham's Options and Volatility Newsletter. We'll be taking a look at our most recent earnings-based trade on Nike NKE, where some big-time turn structure volatility edge set up for a put calendar spread trade to capture that big vol edge and profit from a slight pullback. So let's jump in and take a look. First of all, here is the actual opening trade. Here it was on Morning Trade Live, my usual Tuesday morning appearance on the Schwab TV network. So the morning trade, as you can see here, it is to buy the October 18th 83 put, Nike trading about 89-ish at the time, so out of the money put, and then sell the October 4th 83 put. Earnings were coming out the following day, right? October 2nd, or actually after the close, October 1st. So taking advantage of a huge term structure vol edge to position slightly bearishly in Nike. More importantly, as we'll see in a second, capture that huge volatility edge. And you can see the break evens near 75 and 92. So big range of profitability on this as well. So as you can see, Nike reports after the close today, earnings after the bell. Options were implying roughly about a 7% earnings based move. I thought that was over stated by a little bit. Stock definitely getting overbought on a technical basis. It did fill in that earnings gap from the previous earnings release. So again, trade idea just going out buying the traditional October 18th 83 puts, selling the October 4th 83 puts, and paying about 40 cents net debit. So you're buying about a 45 IV at the time, selling over a 90. So a big term structure vol edge. We know that will absolutely flatten post earnings. And you have, if need be, the 10-11, the weeklies in between the October 18th expiration we're buying and the October 4th expiration we're selling. There's a weekly in there to further hedge, to chop wood, as I call it, if needed to hedge that. So here's that kind of chart right before earnings came out. As you can see, stock definitely getting overbought on a technical basis, right? 9-day RSI got over 80, started to weaken just a little bit. Bollinger percent B near 100. MACD certainly reached a recent extreme weakening. More importantly, here's the IV as normal in front of earnings, elevated, right? Plus the stock did close that earnings gap. Here was the last earnings big torpedo, right? That sent Nike shares down to multi-year lows. But the stock has rallied nicely and basically, in all intents and purposes, closed that earnings gap, as we kind of mentioned in the initial alert here, right? Stock overbought, right, and filled in the earnings gap. So that kind of, set up, I think, for a pullback towards that 20-day moving average around 83. That's why selecting the 83 strike price, plus a 7% earnings base move, right, would be about 6 points, give or take, on the stock, which again puts it right at that 83 strike price, the lower boundary. So that's why we selected the 83 structure. So here's the actual trades after that alert came out, and you can see most people getting filled, between 40 cents and 35 cents delta on the trade, right? Buying a negative 26, selling a negative 23, so slightly bearish, right? Obviously these are a little overstated simply because that huge implied volatility differential, right? So the term structure volatility, right, over 45 points, as you can see, selling well over a 90 IV, buying just around a 45 IV. Here's another fill, basically a little bit cheaper, but the same obvious term structure vol, same delta, and so forth. Later on my Tuesday with Tim weekly webinar, right, which was done after the trade came out, but before earnings were released, right? One of the, subscribers, John Dalton, said he just did the Nike for 25 cents, right? Nike did rip higher, pulled back a little into the bell, right? Blair, I like this very much. I like the Nike, and there's absolutely a reason to like it as well. Here we are post earnings, as you can see. The stock did pretty much exactly as anticipated, right? Did move right back down to that 20-day or that 20-day moving average, right? 9-day RSI got absolutely back to a neutral reading. Same with Bollinger %B, MACD weakened, almost generating a sell signal. And as important as anything else, that, implied volatility crush certainly happened here. So we can see here's the exit that was issued after earnings, right? Nike's lower post earnings, right? The stock definitely down on the trade. You can see the stock down about $5, right? So that certainly worked out from a price perspective, but term structure volatility is flattened as well. That's an even bigger thing, right? So let's grab the nice gain and move on. So close out that Nike spread for a 75-cent net credit. Here are the actual fills, and you can see again, getting out at 75, 76 cents and so forth. That term structure volatility now still, somewhat elevated, but nowhere near that 45-point differential. Now it's just about a 10-point differential, right? Deltas haven't changed too much on the trade. So from a delta perspective, that 5-point drop, probably added maybe 10, 15 cents to the trade. But we were able to pick up 35 cents on the trade. Why? Because this huge term structure of vol flattening, we were able to sell a 45-point term structure vol differential, cover it at only 10 points as we anticipated. It flattened by 35 vol points, so a very nice flattener indeed. Days held just one day, right? We got out basically the next morning per se, and out at 75 cents. So in at 40, many people got in a little bit cheaper, but certainly you could have gotten in at 40, no problem at all. Out at 75 cents, some of you might have gotten a few pennies more, but the net gain 35 cents, which on the surface seems like, ho-hum, right? But that's an 87.5% percentage gain overnight on a trade where you're just risking 40 cents to begin with. So these are the kind of trades really look for day in and day out. So hopefully provide some insight into how to go about identifying nice edges in the market, structuring the trades that give you a chance to continue to hedge and so forth, and then taking profits off the table. So until next time, as always, here's to good trading. Take care.